You moved from California to Florida. Then you sold the California house. Here is what California still gets. California taxes the gain on that house. Residency does not control this one. Revenue and Taxation Code Section 17951 limits a non-resident to California source income, and gain on real property is sourced to the state where the property sits. The house did not move with you. Escrow acts on that. On almost every California real estate transfer, Form 593 requires withholding at 3 1/3% of the gross sales price. Not the gain, the price. Two things most guides never mention. First, you can often elect a different method. Form 593 line 29 lets an individual withhold 12.3% of the estimated gain instead. On a property with a large mortgage or a modest gain, that leaves far less cash sitting with the state. Second, there is a certification written for people exactly like you. Form 593, Part 3, Line 2. It certifies that you last used the property as your principal residence without regard to the 2-year time period. If you moved out first and sold later, you may qualify for a full withholding exemption. Read that one carefully. Publication 1016 says the relief applies for withholding purposes only. It stops the cash from leaving escrow. It does not decide whether the gain is taxable. The federal Section 121 exclusion still applies for California. Section 17131 conforms. 250,000 single, 500,000 joint, if you owned and used the home 2 of the 5 years ending on the sale date. Whatever was withheld comes back on one line. Form 540 NR, line 83. Florida charges nothing on the sale. California charges its full amount above the exclusion at ordinary rates, because California gives capital gains no preferential rate. Plan the certification before escrow closes, not after. Tax expert today.